Mr. Sheshagri Rao joins us, Joint Managing Director and Group CFO with JSW Steel. Mr. Rao, morning. Thank you for joining us. Mr. Rao, whichever way I cut your quarterly performance, numbers have been below estimates. Margins were down, sales have been sluggish, and profits were down 56%. So what led to the decline? Tough environment, low demand for steel prices, or high input cost?
If we see the volume-wise, I think JSW Steel in the challenging environment has done extremely well. If we see the volume growth of production is almost 20% and the sales were 20%. So in that event, the net sales also has gone up by 36%. So there is a huge amount of good performance. The margins were down, cost pressures continued because steel prices were much sharper relative to the fall in the raw material prices, and also the iron ore is being bought in the e-auctions. The coal prices which got corrected with a lag. So taking that into account, the overall margins have fallen by 1.3% relative to the corresponding quarter of last year. Rupee also depreciated very steeply, so that added again a foreign exchange translation losses of 500 crores. So on the face of the results, it appears to be lower, but the volume-wise, the company has done extremely well, even though the demand side is not very robust in the last quarter. 1.9 million ton of sales is a very good number in the last quarter.
Mr. Rao, good morning. Your operational performance has been better than the street estimates as well. How have you managed the sourcing and costs of iron ore in this quarter?
No, majorly the iron ore is being e-auctioned. So the e-auctions which have been done, JSW Steel has been participating in that. So initially there were certain issues in the movement of iron ore, logistic issues, procedural issues. So because of these issues prior to October and also partly in October and November, the company suffered. But gradual improvement in the iron ore dispatches, the company could improve the capacity utilization. So basically the improvement in iron ore supplies and the frequency of e-auctions, these helped the company to get iron ore and increase the capacity utilization.
So Mr. Rao, for the quarter gone by, what was your total capacity utilization, and do you expect your capacity utilization to improve in the current quarter?
The capacity utilization in the month of December improved to 84%. For the quarter as a whole, it was 72%. Is it possible to sustain this production of 84% going forward in the quarter January to March? Mainly it depends upon e-auctions. If e-auctions are done at the same frequency as is done in the last quarter, and also the prices are reduced in line with the international prices, including NMDC, in the last quarter, the company has paid substantially higher prices for NMDC e-auction iron ore. Majorly, they follow a principle of fixing the iron ore prices based on last quarter prices. October to December, there is a large correction in the international iron ore prices. So we are expecting that NMDC would reduce the price in this quarter. So based on the iron ore availability and also the new mining will be allowed by the Honorable Supreme Court, which will augment the supply of iron ore because the stockpiles are getting exhausted. So subject to all these conditions and availability of iron ore, I think we should be able to maintain as far as the production is concerned.
Mr. Rao, just to detail the point that you were just talking about, the judgment for the mining ban in Karnataka is expected on Jan 27th. What is your expectation? Will some mines be allowed to restart operations, and by when do you see these problems getting sorted eventually?
The hearing is scheduled on 27th, but we do not know what the outcome would be. What we are expecting is that there are certain clean mines which have been recommended by CEC that there are no irregularities. So Honorable Supreme Court would consider allowing at least those mines. Thereby iron ore supplies will continue and the industry will not suffer. That is what the expectation is.
So as percentage of your total cost, what is the total raw material cost? You can add up the coal and then the iron ore cost for us.
Generally, the raw material cost is a very significant cost in the steel production, particularly a company which doesn't have the captive iron ore and the captive coal. So the overall cost of raw material is over 70%. That is the cost right now.
Mr. Rao, just to wrap it up in one word, if you have to characterize the environment for JSW Steel, challenging, positive, or are you a bit concerned?
It is challenging. As you see, even though we had a very challenging time in the 6 months, starting from July to December quarter, the company continued to show good performance in terms of volumes, majorly on account of iron ore supply. So we are working very hard to see that the iron ore situation will be eased out and we will be able to come back to normalcy very soon.